If you think the ASX tech sell-off is a disaster, think again, because 8 major ASX tech stocks have just hit rock bottom, and history shows this is exactly where the biggest and best opportunities start. Our experts who've been guiding investors through every major cycle for decades and whose insight are called on by Bloomberg, CNBC and Sky News, to name a few, have been tracking the tech collapse very closely, and today they're revealing which stocks could be setting up for a powerful rebound that doesn't come around often. So before you sell or buy another tech stock, stay with us. This is the insight you won't want to miss. I'm Philip Tortevsky, joined by senior analyst Janine Cox and Pedro Banales, and we are Wealth Within. Good evening.
Good evening.
How are you?
Great, thanks. And yourself?
Nice and warm?
Oh, look, it's just starting to heat up in Melbourne, isn't it?
Yeah, that's good.
But just wait, next day it will rain.
Exactly, Pedro.
Excellent. Yeah, I'm excited about the market actually and what we're going to talk about today.
Yeah, we've got some amazing stuff to talk about today. So let's get straight into it now. Since late September, we've seen the Aussie tech sector index take an almost 30% hit. When you compare this to the US tech sector, we've fallen much harder. So the two questions here are, why is that, and does that mean a bigger opportunity in the ASX when it starts to turn around? I'm going to ask you this question, Janine, because we've had, I guess, news, we've had media blow this whole thing up saying AI is crashing, Michael Burry has been selling, and then we get NVIDIA come out with record earnings.
Yeah, funny, isn't it?
But the Aussie market's fallen a lot harder. What's happening here?
A couple of things. I mean, okay, the Australian tech sector's fallen 30%. That's got to be an interesting proposition to be closely watching. And the other side of it is thinking about what happens when there's earnings that are high and positive and the market's saying that's great, because our market's factoring in the new 6 months ahead. But what's happening now is a bit of a check and balance to see, well, what does this really mean? Because what do your figures look like in 2 to 3 years? That's what is really the question that's being asked, and that's uncertain.
Is
so
it
the market's wondering, okay, have we got ahead of ourselves then if we do not have a clear picture of what that looks like?
All right, and so does that, I mean, I'll get your thoughts, does that then lend itself to perhaps an opportunity to buy this dip, as they say, more so than something structurally broken with this AI and tech sector?
Absolutely. I mean, the tech sector, in itself is a volatile beast, and it's volatile on the way up and it's volatile on the way down, and there's overshooting and undershooting. And right now, what we're seeing is a little bit of a back to reality type, revaluing of the tech sector as a whole. And I think there's a little bit of uncertainty about what's really needed for this AI race. I mean, what type of microchips are going to be needed, what type of software, hardware, all things like that. It's kind of hard to gauge because we really are in uncharted territory when it comes to that space. So of course there's going to be revaluing to the upside and downside, and that's when we can capitalize off those runs.
Yeah, all right, well, let's get into the exciting part and the big opportunities at hand in tech. So we're going to bring up the chart of the technology sector to see what's happening first, and then get into our first wave of tech stocks that have massive potentials for major turnarounds. All right, Pedro.
All right, let's get into the chart. This is the Australian Technology Index, and we've got the monthly on the left, weekly on the right. Now let's have a look at the recent fall. So we're talking about that, roughly 30% fall from that peak there back in, when was that? In September 2025. That's when we had the all-time high. We're down around that 28%, but actually right now we are a little bit less. We're around that 25% down. So I think that it has come to an interesting level at the moment. You can see that it's a previous support level that we've seen time and time again. It was a level that was finding some price agreement or some support and things like that in the past, back in 2020. But what's also interesting is the fact that we've come to this momentum, long-term momentum that was established back in COVID. And in saying that, from COVID, this sector has become a lot more volatile. It actually has changed. You can see the ranges of the bars are quite dramatic. It never used to be like that. It used to be a little bit more subdued, sideways trending. But now look at those wild swings that we're seeing. So finally, what I want to say is that our fall has been much bigger than the Nasdaq. So if we look at the Nasdaq Composite Index, if I overlay that, right, you can see it tracks it quite nicely. But have a look, if I put that down here so you can see,
I'm going to go cross-eyed soon, mate, if you keep...
Well, that fall in the composite is a lot shorter than our one. So that to me is saying that we've had a little bit of an overreaction to the downside, because if the American market isn't as worried as we are, then possibly we shouldn't be so worried either.
So are you saying right now, looking at that, there is potentially an opportunity for a bit of a turnaround story?
Absolutely, and I think that we are getting to that level right now. So around that 2,100, that level right there is the one to watch.
All right, well, let's get into the stocks, Janine. What have you got for us?
This is exciting, isn't it? Now, we're just having a look at Block Inc., okay? This is the code XYZ, and you can see there that it's been trawling along the bottom. I've been watching this for some time, thinking that, geez, when is it going to revalue itself higher? But again, this has been sold off. And to me, this is setting up for a really nice little opportunity. We've seen a nice formation unfold. It actually traded to a level that I expected it to, but I actually wasn't expecting the significant sell-off that we saw on Block Inc. To the degree we did. But the fact that it's got this bottom here, to me, is a potential for huge appreciation if it can actually get back through that high. So I think it's one to watch, definitely, and keep it on your radar. But make sure you've done your research into it, obviously, and just have a look at the weekly chart, because that's really going to tell a lot more and give you a lot more detail as to what's going on with the stock right now. It's come back to an important level around that $100 mark. Historically, that's been really important if you go back to the left-hand side of the chart, around that range. But it's just settling down sideways for 3 weeks. We just need to watch this space.
Yeah, it's interesting. I know that fall that happened, as you can see it on that weekly chart, was due to an announcement that came out, and then the stock quickly reversed on that as well. So I think it's in an interesting spot. All right, Pedro, next one.
All right, next one, we've got Xero. So this is actually one that we've done a fair bit of analysis here on the trading essentials, and I've had a few students email me about this stock, asking whether it's time, because they've been looking at it. They've traded it throughout this whole period, from that low in 2023. They've made their money, and of course now they're looking to get back in again. So let's have a quick look as to whether this could be a nice opportunity. Now, it has reached this level around here, and it's actually traded a little bit below it. So that's one little bit of a concern that I have around that. The 125 was a significant level for it, so it has traded below it, and you can see that that level even dates back to that 2021 period. But we do have another level around here, around that $100 mark, and that $100, of course, it's going to be a psychological level as well, being around that kind of round level. I think that if it does fall further, it will bounce around that 100, so it could have another 12% down. But it's definitely looking like it's ready to, soon. I think it's one to watch. Definitely start back testing it, starting to do your strategies on it. Get ready for when it does turn, because when it does, this is such an easy stock to trade. Look at that. You could just put a momentum below it, and you could just use that to trade it. And, you can do that. You've done that multiple times in the past, and you would have been able to trade it nicely and extract some profit from it. So definitely this one is one to keep an eye on. Keep an eye on that $100 level for me.
Yeah, it's really interesting to me. Before we go to the next stock, you look at a stock like Xero and you see how long it's been falling for, and then you tie that in with what we're seeing now with all the headlines about AI and a tech crash. This market's been falling for weeks and months before we're seeing it in the headlines. Is that something you often see quite often? I want to get your thoughts on that, because we speak about it a bit, and now we've got a live example of it happening. It just shows how important it is to look at these charts, because 99.9% of the time, for me anyway, you'll see it in the media, normally when the time is for it to do something else.
Yeah, exactly. And I think one of the points I mentioned a while ago, and we teach our students to follow the sectors as well as follow the stocks, obviously. And I did mention following the sector, the underlying, but I think these days, because of what's going on between tech locally and then what's happening with tech globally, and there is a difference. We're seeing that now in the charts, that you can't just assume that because the tech sector's going up in the US that we're going to see the same going forward with ours. And it could also mean that their tech stocks will run for longer and harder in the next run than what ours might do. So it's just something to bear in mind, even though we've had that 30% correction. That doesn't mean that there's not good gains to be made here. I think there are. It's just that, like Pedro says, at the point where they've been oversold, that's when you've really got to start looking and watch the PEs, because even though we say EPS is the one that's most important, the market is not just looking at the overall earnings for the next 2 or 3 years. It's looking at is our market, or what sectors are actually overvalued relative to their 5-year history right now. That's a really big focus. So I think with this stock, for example, it is well and truly trading back in territory of where it was back in 2023. So to me, that's sort of, that's 2 years ago. And I think that we've got to look out for stocks like that.
Yeah, and is some of it, before we go quickly, because there is a difference, you're right, it's an important point about the US and Australia in that when you talk about US tech, they are the biggest companies in the world. They have, we shouldn't say trillions, but a ton of flow, more than the Aussie market gets, because the whole world is investing in these, whether it be through ETFs or through direct investment. So they're seeing a lot of support to be held up, much stronger than what we've seen here. But to me, or I'll ask you the question, does that then perhaps lend itself more to an opportunity in Australia, because it's almost hiding a little bit of what should have happened in terms of the downside, meaning, hey, this is the one that's going to run harder once it turns up, because it's fallen a lot further? Yeah,
I think that could be exactly right. It's quite probable that that's a really good point to make.
Yeah, all right, cool. Let's get to the next stock, Pedro.
All right, next one we have TNE. So this is one that has been running very hard ever since basically 2011. If you haven't had this one or had an opportunity to trade this one, unfortunately you have missed out on a fair bit of gains, but there could be another opportunity coming up. And I think what I do like is that it has come back to refill this gap over here. And that's what you often find when some stocks get ahead of themselves and have this gap. And it doesn't really have much history of having gaps, really. That's what really stuck out to me. The fact that you don't see gaps on the upside, it's quite uniformly up. But then more recently, it had that gap. It's now come back to fill it. So this could be now on its way, ready to come back up again, because now we have come back to that previous, I'm not going to put a support level here, I'm going to put a price agreement type of level, because there's been multiple opens and closes roughly around that $30 mark. So anywhere within that range seems to be a level where it's going to halt the stock at least until investors and institutions figure out whether that's a fair value or not. And of course, if there's a disagreement, it's going to go to the upside, or if they think that it's overvalued. So really, it's the institutions that are going to run it at the end of the day. We're just going to be the little turtles running on the back of the wave there.
Turtles.
That's right. Yeah. You got to be have you ever read that book, The Turtles? They've made millions of dollars. So there you go. It pays to be a turtle. That's it.
Yeah. I think what you're talking about is check out our podcast that we've done on that. But on Pedro's point and what you're seeing tonight, please go and check out this book. It is How to Beat the Managed Funds by 20%. It's from Dale. It is free. You just have to pay the shipping. The link is in the description below. It's a great introduction to all the things you do see on this show. But as I always mention, if you do want to take your trading to the next level, please go and check out the website and have a look at our government accredited diploma of share trading. That will really set you up for 2026. And I think there's a special on at the moment. Correct me if I'm wrong, but there are thousands of discounts in what you're getting now. You're never going to get it at a better time. So please go and check that out. Make it your Christmas present. That'd be nice, wouldn't it?
Wouldn't it? Just a great present. But I had a bit of a chuckle during the week because someone told me that was your book. They bought your book?
No, they did. Did they really? I've been on here too long. Bloody hell. No, it's Dale's, but it's great. It's a great way to get involved. Geez, I'm a bit younger than that, aren't I?
You do kind of look like that.
Yeah, well, soon, one day. All right, let's get back to the stocks.
Next one?
Next one.
Yeah.
Okay, next DC. I'm glad you saved this one for me, Pedro.
Oh, you can have the nice one.
What is interesting about this one, and this is a classic case of a real trading stock. What do we mean by that? This is one where we talk about stocks going up in stairs and down in elevators. Well, we're seeing it in a lot of these tech stocks. But the interesting thing about this stock is there's this real interesting level. It's probably a little bit higher than where I've got it there, somewhere in that zone where it keeps coming back to that level, and it's been doing that since 2018. So, that's a really interesting sign, but there is a bit of a gap on the monthly chart. Someone asked me during the week, what do you think about gaps? And if I see one on the monthly chart, it's 9 times out of 10, it'll fill it. And so I'm just watching to see whether this stock comes back into that zone or not. But it might defy the odds, given this area is such a hot area in the market, and one that you can make potentially just looking at these runs. You can see here over 6 months, 5 or 6 months, most of the gains are made during that time. And the order is of, if we're measuring it from here, sort of the 50% is not uncommon for these runs. And it's done it again in this recent rise. So waiting for the next one is the key here. I think given there's some support at this low in October, I see that as being an important level. This line here that we've got up here, there's multiple price analysis, and people look at these momentum lines and then they see a stock that goes below it and they say, well, why did it go below that line? Why did it break it? And it's because we've got a confluence of analysis that comes into it that can pinpoint these lows and where the stock's actually going to come in. And we're going to see that same thing happen again, I think. So if it does find support on this line or even just below, that's fantastic. Then it could go all the way to challenge that high once again. So something to watch. At the moment, this is really in flux, isn't it?
Yeah, and I just wanted to stick on this point because you mentioned something really technical there. And I was also chatting to a dude the other day, and he's playing these tech stocks. He was a bit dejected, right? Because he said, I've gone through the tariff situation now, I've gone through this recent pullback, and it has happened so fast that I haven't been able to do anything about it. So I want to get your thoughts, because what you're showing is very, very technical. How important is, I guess, if you're going to trade this space, one, the psychological aspect of what you're doing, being comfortable being there, but two, and more importantly, because when I was speaking to the guy, I said, how do you trade? He said, you could put it under discretionary, but I'm kind of making changes on the fly. And is this a space where you probably have to be a little bit more mechanical? Because what you're showing is quite technical, right?
Yeah.
Maybe you can get away with it in other sectors of the market, but in here, in the technology sector. In
this sector, without that, you can get killed quickly.
Yeah.
Because it'll just wipe you out, as we've seen with those pullbacks. Technology One, this stock we've just looked at, NXT. We've seen it on what's the one we were looking at? Pedro was looking at this one.
Zero.
Zero. All of them similar sort of thing, although Zero's been a lot more reliable until just recently. Who'd have thought that Zero was going to pull back the way that it did? But that illustrates the point that you're making.
Because it can put you off if you don't have a plan. You can think, well, what's the point here? I get all these gains and then it just drops on me like that. But if you know how to look at it, how to structure it, maybe work the different time frames.
Well, look, I think sometimes that traders try to apply a one-size-fits-all. They think that they're looking at charts, they're being told certain things, they're looking at moving averages, and they're thinking, once it comes back by this amount, then I'm just going to buy it. But it doesn't work that way. It could be that it comes back by 10%, the next time it comes back by 15, and then it's 30 after that. There's a relationship between these pullbacks that we're seeing on stocks, and it's not a coincidence either that these things happen. So the timing becomes critical. So you might have to learn to change your strategy once it's getting to a particular point in the cycle. And that's what is so important. And I think with the information that people are getting in our diploma, plus the courses that we have after that, they've got everything they need to determine when that top is coming in or reasonably close to it, and then be able to assess the best time after the bottom, not before. That's the key, after the bottom, to take another opportunity. Yeah, well said. All right, well, that wraps up our first round, but don't go anywhere because we have more tech stocks coming shortly, some which are showing opportunities we haven't seen for years. But now time for our trending topic this week. Janine, what have you got? A big one. Yep, it is. Thanks, Phil. Today is BHP. When the big Australian walks away from a deal, we have to ask, is it time to buy? But first, let's take a look at this.
BHP has dropped a bid to take over rival company Anglo American.
For more, we're joined by investment portfolio manager Jun Bei Liu in the studio. Jun Bei, good morning to you. Why wasn't this takeover bid successful?
Look, it's very difficult because it's across many jurisdictions and there's lots of regulatory approval required, and quite frankly, price wasn't high enough. And this is not the first time BHP made the bid in the last couple of years. So look, they may come back, but unfortunately, just not high enough price. BHP already is the largest miner of copper, so they want to have those access to those mines for the future.
Any wider impact on the share market?
Look, the share market is going to feel quite happy that it doesn't happen because usually the top of market, big miners pay big price at the top of the market. Usually it's a sign that price is probably peaked for those miners. So investors are actually quite relieved that this didn't happen.
The latest news comes ahead of a vote for Anglo and Teck Resources shareholders on their proposed $60 billion merger. What did BHP say? Whilst BHP continues to believe that a combination with Anglo American would have had strong strategic merits and created significant value for all stakeholders, BHP is confident in the highly compelling potential of its own organic growth strategy. If the market liked the news, what other irons does BHP have in the fire? Their strategy is not just growing existing mines, but also backing greenfield exploration and major international projects. BHP holds a 33.75% stake in the Resolution project in Arizona, which is one of the largest undeveloped copper deposits in the world. So some in the industry believe they should focus on what they've already got. There may be other opportunities on their list. So is now the time to buy BHP? Let's take a look at BHP and a small copper stock to watch. All right, there's the chart of BHP. Now, I mean, it's come off its highs, so there's got to be a bit more value in there, we think, with BHP. So there was a 35% fall on BHP's stock price. Now, we've recently seen BHP break through this angle of the trend coming down and move up nice and strongly. Now, recent news about China's position, the Anglo-American deal that the market was just stopping to watch and see what's going on, could actually mean that BHP comes back a little bit before it then moves higher. Or is this quite a normal seasonal sort of thing for BHP? Because we often see after a breakout of a trend that the stock will come back through and take off again. We saw that happen back here when BHP took off through the angle of the trend. There was a bit of a retracement, a retest, and off it went again. We see time and time again where there's been a correction in BHP's share price. It's broken through the angle of the trend. It comes back to test temporarily, and then off it goes. Could this be that time that we're starting to see unfold now? I could go, back in history in infinitum to look at this. And this is where it's really important to sort of keep your finger on the pulse, because we've seen this stock depressed. Rio, BHP, FMG have been down. I mean, they were probably trading at levels that they were back in 2021 just recently. So there's got to be opportunities there, I think.
Yeah, and I think the big thing for those, especially BHP and Rio, when you look at them, their share prices, although they've been suppressed for so long, they've still managed to hold above real significant levels near the all-time highs.
That's right.
So that means something.
Yeah, they haven't had the sort of volatility that we've seen in the tech sector, which is all about, short-term volatility. It's been more sort of a sustained decline, which you can often get a better bearing on in terms of getting these entry opportunities back into the stocks.
Yeah, and recently we had earnings, which came out and they weren't supposedly great on paper, yet BHP ran. We've got all the, I guess, negative sentiment around China. It's still holding up, so...
Investors are chasing dividend stocks.
Yeah.
They want concrete. Tech stocks, where's the concrete behind some of these tech stocks? That's what investors want to know. Are they going to be paying them? Are they going to be reliable? And it's funny because the iron ore miners have become the low PE stocks paying great dividends above the market average, where the banks have been elevated and their PEs have gone way over where we expected them to go, and their dividends have dropped way back. So, at some point you've got to have that check and balance in the market, and I think that's what's happening now.
Yeah, that's a great point. Did you want to add anything on that one? Or?
Oh, look, I just love that this this level here on BHP. If we go to the chart, it's proven that level multiple times, and that is that $37 to $38 level. Really, that is the one to watch for me. I think if it does come back and retest it, there could be a very nice trading or even long-term opportunity. That's the beauty with this stock. You can trade it short, medium or long. It's got opportunities for all.
All right, let's get to the next stock because I believe you've got a copper stock there.
Yeah, we promised a small copper stock. And just to keep it exciting for you guys, because this, you know that I like stocks above $1. And you're probably thinking, what in the world is Janine doing looking at this one?
Stock.
You know, but I mean, you can see the long-term position of this company at the moment. And if we look more shorter term and use the weekly chart as a real guide for where things are going, we can see that it's been in this long sideways move. We've had a breakout, a bit of a pullback. It could come back a little bit more, but it looks poised to take off. Now, if this thing takes off, I think that it's going to get above that dollar mark that I really like. And I'm not suggesting that I'm going to wait for that point to buy it, but I'm just saying that BHP is a good opportunity. It's great for dividends. You've got to have it in a portfolio, a big portfolio. But this stock could be for those who like more short-term trading opportunities where the stock goes up for 4 or 5, 6 weeks and you can lock in some gains quickly.
Look at the volume coming into it lately. It's amazing.
It's not without risk. I mean, obviously that's the thing to think about when you're comparing, say, a BHP to something like this. It's a totally different portfolio, totally different strategy. I mean, BHP took, what was more than about a year or so to come back to where it was. This came back there in just a couple of weeks, 3 weeks, and that's the difference. And people who don't have the experience or knowledge shouldn't be trading this sort of stock. This is for someone who's, they've learnt how to trade, they've learnt how to manage that risk for themselves. That's really the type of person I'm talking about.
Yeah, and I failed to mention before that the link is in the comment section below for that special if you want to get involved in our share trading courses. So please go and check that out. Now, if you do want the skills to analyse stocks just like you've seen tonight, visit our website, wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Pedro, I know there's a few here on that list coming up that are looking for opportunities that haven't been around for a couple of years. So
definitely.
That's exciting.
Yep, next one being one of those, and that's PEXA Group. So let's get onto the chart. Monthly on the left, weekly on the right. Now let's start off on the monthly here. The stock IPO'd back in 2021, so it's a relatively new stock. And as they, most of them do, they fall. What I do love about this is that it fell and came back, retested that level, rose up, retested that level again, and I'm talking about around that $10.90, $11 level, and now it's shot up and it's actually broken above these highs more recently. So that high there, around that $14 to $15, which was a previous support and resistance level, it actually shot up above it. So it wasn't like this previous run where it actually failed to really get above these levels that it had on that previous bounce. So that failed, came back, retraced, and we do have a very interesting pattern unfolding there that I'm sure a lot of people would understand that why it's important. Now, the only concern is that it has traded below that $15. That would be my only concern. I'd be applying more analysis, obviously more in-depth analysis, but just as an overview, just at the moment, just now, I think that the next possible level is around that $13.70 because we've seen some agreements and some resistance and support levels in the past. But of course, we have to put more advanced levels and strategies to really find out where it's going. But one more little bonus thing that I'll add here is that there is a little bit of a momentum happening here. So if we do get a bit of a bounce from this level here, I would think that it could be quite strong, and a more conservative trader could wait until it gets above that $17. But this is looking very interesting. I'd definitely be putting it on my watch list.
Great. All right, next one.
All right, let's have a look at Megaport, MP1. Now that looks really like a bit of a disaster at the moment, but is it an opportunity coming up? That's the question right now. So we've seen a pullback from recent highs, and I know that there are a lot of people trading this thing short term, which is what I'm suggesting that this is an opportunity for. It's not a long-term proposition, it's a short-term opportunity at the moment. But if we've got to look at where the stock is trading relative to where it's been in the past, and it seems to be hanging around that $12 mark or close to that. It wants to sort of track that line. But any break back up will signal to me that it's actually back on this longer term trajectory. It's still got 20% to the high, which is nice. You want to see that. If it breaks this line here and comes back further, I just put it on the watch list, leave it there to wait a bit more, maybe more medium term, rather than just trying to look for a short term opportunity right now. But it could just reverse. I mean, the last time we saw one of these bars unfold, we saw, this was back in August 2025, and it's what we call an outside bar. If you come with us to do our courses, we'll teach you the significance of all of these and how you can use them in your trading. But you can see here that this pullback now is actually coming back to the same sort of level again, same sort of bar, but obviously the month's not out yet. We just need to wait to see where it closes and then look for what the bar does next month. That will be really an important indication of what Megaport's going to do. If you're holding the stock, you want to have really good rules on this thing because it does look pretty volatile. You can see here on the weekly chart. And the reason people like it is because it can produce some really good gains in a matter of just a couple of months. But then you have to know how to get out of it, don't you? It's easy to buy it, but then what about when you're going to get out? Now, you can see how it changed personality all through here. It was different, you know, and that's the real sign that often a lot of traders miss because they're looking at daily charts. They've got no idea what's actually going on with it. They might think, oh, I'm vindicated, it's gone up this week, but then all of a sudden it comes back and then they're trying to answer the questions that they should already have answers for before they even buy this sort of stock.
And I mean, when you look at it, I'm sure the answer that you're going to give is you're not surprised that it's pulling back from that level because often stocks, when they do break out into those new levels, that can happen. So it's what comes next, if I'm reading between the lines of what you're saying, is where that opportunity comes.
Well, see, a lot of traders think that once stocks break out for above prior highs that they're just going to keep going, and they don't. But there are hidden levels. There are secret levels where with any stock that you can uncover just by having some deeper knowledge on technical analysis that we teach. So, and looking at it now, you know, you just have to give it time now, but it could come back, find a base around this point and then make a move up. If it keeps going down below this level, like I said, you just have to sit back and wait. But if you're holding it, you need to have a strategy to manage your risk.
Well said. All right, next one.
Next one. All right, so we've got Objective Corp Limited. Now, monthly chart, let's have a look at what's going on. This is similar to that previous one where it reached not only a previous high, but a previous all-time high in this case. So that's that level there, $22. It reversed quite sharply from there. So that's that would be a little bit of a concern for me if it wasn't getting to this beautiful trend that is established, you know, from the low of 2023. So I think that if it does bounce around that $15, this could do quite well. And I'll just outline what could happen. So, you know, just visually, it could come back up, retest that. Of course, it wouldn't do it sharply. I mean, it could, but if history is any teacher, then it probably would do something like this, you know, trade sideways for a little bit and then bounce up. But that could definitely be one scenario that could happen. And if it does, it could present a little bit of a short-term opportunity. If you were to get around these levels, you could eke out, say, 20% if you were a short-term trader. If you're a bit more long-term, obviously, you'd have that strategy already played out. But if it does break below this momentum, I would be a little bit more worried, and I would expect maybe some possible support around that $14 mark.
Yeah, and I think more than anything, when you look at this chart here, what you said before, you know, you're looking at the worst case scenario, which is important. You know, 20% upside to the next high, which I find a lot of traders sometimes miss because they got their eyes going, oh, I'm going to buy this and I'm going to hold it, and it's going to go to, you know, blue skies, and I'm going to make a ton of money, but when you have that mindset of you pick the worst case scenario and you've got the optimal entry, you know, you're not necessarily saying that to sell at that level, because what it often does also when you get that optimal entry and play those ranges is that it gives you the ability to then be in at the right time. Even if the stock were to make it the worst case scenario, you could still hold and let it play out and let it run out, all the while sitting in potentially a profit rather than sitting in a situation where, you know, you've bought, you're in the red, you start sweating, you're thinking this is crap.
Yep.
Just push the sell button, and then it goes on and moves. But I think that's the benefit of what we're seeing now with these kinds of stocks. Is that kind of what you're getting at?
Yep, and your mind will trick you. You'll start thinking, well, I'm investing into the stock, so I'm holding it for long term. Doesn't matter if I'm down 20, 30%, I'm investing in the story. And you start, thinking all of these different things where when you started off, you wanted to get a certain amount of profit from it. So definitely don't let that psychology kind of get to you. And even if you are investing in the stock, you want to get at the most optimal time. So that's where technical analysis really helps, timing the market, which is really important.
Yeah, great. All right, next stock, and I think this is the best one. Just putting it out there.
Next one is Bravura, is that how you say
Bravura.
it? Bravura Solutions, BVS. And it's actually come back pretty swiftly to test that prior sideways range, which is a great thing to see. Some people, if you're holding it, you're probably not thinking it's so great. But if you're a technical analyst sort of scoping the land to see what's coming up, and let's just have a look at that monthly chart, we can see that trend just looks so nice, just coming up that high. That's the sort of thing that you want to see. A retest is a great thing because then it's not getting too far ahead of itself. And this could just mean that it's a short-term pullback before we get another move up. And the beautiful thing about a lot of these moves on the chart is they give you signposts that tell you what that means if the stock trades above it or below it. And that's a real key thing there. So I think that if we're looking at this, it's performing quite normally as to how we see stocks unfold. If you're looking at this one and thinking that, as Phil said, that this could be the best one and you're thinking about it, I think that there's probably a little bit of an argument to say just wait until it gets back above this high, given that it's had more weeks down at the moment than it's had just recently moving up. And, you're not going to be trying to pick it off the bottom. That's the key rule here. It's about waiting for the momentum to start pushing it higher and having a good strategy and a good entry rule. If you're in it already, then obviously you wouldn't be concerned about it at this point because you'd have your stop loss in place and you might be a little bit dejected because you're on it. It was on a great run. I mean, let's just have a look here at how far it did head up when it sort of took off. It was up 40%. And that can be really upsetting for new traders, but it could just mean that you're into the wrong type of stocks if you're not familiar with this unfolding.
Which is what we were speaking about in 4. Yeah, so important. All right, well, moving on. Actually, before we move on, we've got to get your favourite stocks.
Oh, that's
Janine.
right. Look, I think I'm going to go for... I'm not going for any of the first 4. I think I like NXT is a really interesting stock, yeah.
All right. Pedro?
Data centers. For me, I would have to say, let me have a look at them again. I do quite like Zero, so that zone that it's getting into, I'd be looking at that one.
All right, great. Now, shortly we are going to get into our hot stock tip, which came out with major news today that could send the share price skyrocketing. You don't want to miss that one. But first, let's answer your questions. Serkan writes, I bought WiseTech Global at 70.45, so could you please share your thoughts on the stock's outlook and whether you believe it remains a strong long-term hold based on current market and company performance? All right, short and sweet. Pedro, WiseTech, long-term hold.
Well, I can't see an entry rule here, so you're obviously trying to have an opportunistic buy, which is fine. Just be ready that you may not be able to duplicate your strategy. That's one thing that I find. You may have bought at a good level. It might be starting to trend up, but that's the problem with opportunistic buys and buying it on the fly like that. You can't replicate it. Whereas if you would have back tested this stock and found a strategy that works, say, 80% of the time, and you took that rule here, not only are you adding to your probabilities of your strategy and refining your strategy, but you're also possibly profiting if it goes up. Now, you don't get that same benefit. You only get the profit if this stock turns. So that's just one little bit of a thing that I would say. Now, whether this is looking good or not, I would say that this level right here, it is important, that around that $62, $63 level. If you wanted to round it off, you could just say $60 has been a very important level for WiseTech. You've got the all-time high at 140, so it's around that half price sale at the moment, which could have been a reason why Serkan bought. I'm not sure if he's a student or not. It would be interesting to know. If you are a student, email us in I'd like to know, what was the reasoning why you bought this stock. But it's interesting at the moment. I think I've said enough about what I would say about it. I think it's a very interesting level.
Yeah, there you have it. All right, interesting stock. Good job. Now, Alkin's email is next. Would love your thoughts on PHX. Don't own this stock, but I feel some decent money could be made as it seems to respect the long-term lows very strongly. I missed the recent run, but when there is an entry signal, I'd be looking mid to long-term on this one. All right, Janine, what do you reckon, mid to long-term?
Okay, this is PHX, is it?
Yes.
Pharma X Tech. I don't know if it's actually changed its business or name or whatever, but just looking at that history, I thought it was important to see the big picture on it. And look, it is developing some shoots more recently, if you can see how it's traded up to those prior
Some shoots.
tops. Yeah, it is.
Term.
Yeah, maybe this is the planting season for it and it started to take off again.
It's around the lows, is it? It's not there at the moment.
Mate, if you're looking at the whole chart, I can really see what you're saying because that's why I was showing this. But it's not round the lows if you're looking at what it's done over the last decade or so. It's actually at the highs of those ranges right now. So you see, going back to 2007, back here, it's right back up at those highs. Now, in saying that, it's not a bad thing. It's a great thing that it's actually doing this. Now, it may be time for it to break through soon. It could be just retesting it again. There's a 42% pullback there. Looking at the trend coming up, it looks like it's just coming back to the angle of the trend at that moment. But the thing with these more illiquid stocks is you just don't know.
Yeah.
You never know how far exactly that they're going to come back. I mean, these stocks it could come back 60% as a possibility to that prior level there below the dollar mark. And if it gets 10 cent mark, and if every 10 cents that it takes out or it halves in value, could represent an opportunity right now. It could be a turnaround point if it does that, but I don't know. I think you need to wait to see it sort of a rebound or a retest of something because we just don't know if the bottom is in for that current pullback that we're seeing. It could find some support here.
Yeah.
But even if it does move up, it's going to be a day-by-day, week-by-week proposition in terms of managing it if you're holding it. And if you're not holding it, the best opportunity could be coming up down the track if it gets through all of that.
All right. So you're saying if it breaks 20, it looks a bit more interesting and a bit more safe.
I think so.
Yeah. All right. Ilya is next and writes, I've noticed that you mainly focus on ASX stocks. I was curious, what's the benefit of concentrating on the Australian market when the US market has so much more money and volume flowing through it? Is there something about the ASX that makes it better for certain strategies or traders? All right, this is a nice question.
Yeah.
Who wants to take him on?
Well, one thing I'd say, I'm ready.
Easy, mate.
Yeah, that's right. Ready. I'm ready for this. I mean, this is a question that we get asked so often, and it's actually something that we address first up in one of the modules, in the course. And first of all, you've got more risk. You've got the currency risk as well when you're trading in America. And really, I mean, the American stocks, I'm not sure how many there are in the market. There's thousands in there. In Australia, you've got less stocks, but that just means less stocks to really analyze and to focus on because you don't want to spread yourself out too thin. And the moves that the ASX does, the stocks in the ASX, can rival the moves that the US stocks have as well. Just because there's more money flowing into it doesn't mean that the price movements are going to be, the volatility exactly is going to be higher than the ASX. So I would say that for me, the main thing would be the currency risk as well. That's that for me is, and why go to another backyard when we've got the best market here?
Well, I think you make a good point because if you were somebody, when that argument comes for me anyway, when you're talking about, well, there's more opportunities out in the US. Well, if you're an individual trader, unless you've got trillions of dollars that you want to play in most stocks, most people can generally get into 10 to 12 stocks at a time. And Australia offers about 2,000 options itself. So, I mean, really, how far wide do you need to go to get benefit? And I don't think I think 2,000 is even too much for an individual trader. Thoughts?
Look, I would say that the tech scenario has really changed things in the US. So that's been the big divide here. So prior to that, if you go back, say 10 years ago or around that time, I think I remember reading the stats that said less than 2% of the funds in Australia were going into the US market. right? It's changed now. And what's driven that? The tech side of their market. If you think what's dominating their market, that's where it's flowing.
Yep.
That's why those stocks are just going up so much, and that's why they've gone beyond valuation the way that they have. It's because it's not just money from here. So when they come down and there's a big crunch, of course, it's not just going to be felt in the US, it's going to be felt much more globally. So, I'm not being a bit of a sadist and doom and gloom, but when it's going to happen when it does eventually. So therefore, what you're alluding to is what we were talking about, what you've done in podcasts. We've done it on previous shows where we've actually shown people that it's possible to make just as much, if not more, depending on the stocks that are being chosen. And some of those stocks that you did, I can't remember which podcast you talked about it, but there's some of the ones outside the 100 in the 200 on the market that have just gone phenomenally well.
Oh, and plenty of our hot stock tips. I mean, they've gone up hundreds of % over the last 12 months. I can't reel them off the top of my head, but there are 50, 60, 70 opportunities I've seen on the ASX alone that would rival, destroy what we've seen out in the tech sector out in the US. So I think that answers your question. There's enough opportunity out in Australia. Keep it home, mate. But we now have Ben's email. Keen to hear your thoughts on James Hardie. Could be a falling knife and still in dangerous territory, but could be an opportunity. I'm more of a long-term trader and do not own this stock currently. Now, this is the second email we've had about James Hardie in 2 weeks.
Yeah.
What do you think?
Just on what we were talking about before, it's really interesting because look how far James Hardie could go in a run. I mean, does that look like a tech stock to you? It does. Tech stocks have that sort of gain and that sort of volatility. So it just, is to your point about you can find those sort of gains on any stock.
Yeah, we've spoken about this endlessly, even a few weeks back. The market has changed in volatility since COVID. It is a fact. And so now the opportunity is endless, but with that also comes the need to be able to be skilled in terms of getting in and getting out. This whole myth about don't worry about timing the market in today's world.
Look at James Hardie.
You're playing
case in point.
Yeah, you're playing with danger. So on James Hardie right now, what are we thinking? Is it a good time to look at it, buy it?
I
Pedro?
think it's coming into a very interesting time, actually. Time and price together, and pattern. So this overall pattern that has unfolded here looks very interesting to me, and it looks like it could be the end of a possible run in its cycle. And in terms of price, if I get the correct horizontal tool here, we can see that there's a lot of price agreement around that $23. It was a previous all-time high level that it failed to break above for a very long time, and then now it has come back to that level. I think it's quite interesting. Now, on the weekly chart, what I think is happening is we can see volume has come up, but the price hasn't come up too much. So I think that this has been picked up by a lot of retail traders. It's that kind of bottom picking. You don't usually see the institutions really take place around these levels. I think that it's been picked up. So I think that it may be a little bit more downside to go possibly to that $23 level before it starts to get picked up. And I think that why we're getting more questions about it is that people buy what they know. They know that James Hardie's in the construction industry. They maybe go to Bunnings and they see James Hardie, on there, and they think, oh, well, this could be a good time because the stock has fallen so much. But that's not always the case. Just because you know it and it seem like it's cheap relative to what, and it always comes down to the timing and when the stock is ready. And right now, I think that it's almost ready, but not quite there.
Yeah, and there's a bit of talk out in the US that the construction sector is starting to pick up as well. So I think that there's a bit of that going on. But good question. Thank you for sending that through. Now, Kev is next. I had owned AEL for a long time, purchased as Cooper Energy, and sold out earlier this calendar year. And I'm now wondering, as you had it on the show yesterday, prior to the recent consolidation of shares from 11 to 1 and with a former share price well under $1, I've done very well following up on previous recommendations by you both. I'm assuming he's talking about you and me, Pedro, over the last 12 months. But this listing to me came from left of field. Yeah, why'd you pick AL, Pedro? It's all your fault, mate.
A bit left of field. You've got to think left of field sometimes,
But, I mean, two things. The first thing is, it's important to recognise when we look at stocks, even on the Hot Stock Show on Monday, is we're looking at a snapshot at that point in time, and it may look good to us at that point in time. Maybe 6-12 months ago it didn't look good to you, and things might have changed. And it's also the technicals that overlay or supersede everything else when we are looking at things. So I just wanted to outlay that because we looked at it and it looks
quite
pretty
nice.
good.
Oh yeah,
But yeah, it's your fault. I'm not going to take any blame.
No worries. Yeah, if it goes up, then hopefully you can buy me a beer or something.
Yeah.
But
well, he's sold. Yeah. What's your thinking? I mean, do you want to talk a little bit about on what he's saying more so than the stock, because we obviously covered it yesterday. But
yeah, well, look, I'm not sure what he means by left off field. If it's a stock that we don't usually talk about, I mean, we talk about a range of stocks. I'm really not quite sure what he means.
If it was me talking about it, it might have been
that could be left off field. Yes, but you should know us by now. I mean, we've recommended some stocks, not really recommended because we never recommend stocks. We just analyze them really, and what we're seeing, like Phil said, at that point of time, we get excited sometimes, and we just analyze what's on the chart at that moment. But as traders, you always have to be able to change mind. If their stock falls to a certain level, then you have to change your point of view, and that's quite fine. It's not about being wrong or right; it's about being profitable. So always remember that. In terms of AEL, I still think it looks good. It's an energy play. I'll be keeping it on the watch list for sure. This looks like a very interesting pattern over here. And just quickly on that note, I'm just going to apply a nice little trend momentum there where it's gotten towards. So yeah, I'm not changing my analysis at the moment. I think it's looking quite nice.
Yeah, and I may even add, if from what the email showed, if you've bought it a couple of years ago from 2020 to 2022, well, you're buying it as it's falling in a downtrend. It's very different to what it's doing today. And that's the important part to remember, because for me, I wouldn't have looked at it from 2020 to 2022.
Exactly.
Today's a different story.
It definitely is, and it's reached a very interesting level, like we outlined on the show. So if you want to see a bit more analysis, have a look at that Monday show that he's talking about.
Yeah, great. All right, now time for our hot stock tip for the week. Pedro, what is it, mate? All
right, so the hot stock for this week is Mesoblast. But before we get into the chart, take a look at the news that came out today. Momentum is building at Mesoblast with its lead product, Bryansil, surging ahead. Management expects gross revenue of more than $30 million for the quarter ending in December 2025, up more than 37% compared with the prior quarter. The growth is being driven by strong commercial uptake, broader reimbursement support, and expanding usage, positioning Bryansil to become a meaningful revenue driver for the business. Overall, Mesoblast says the business is performing broadly in line with its commercialization strategy and gaining traction in the US cell therapy market. So with all that, let's get into the chart and have a look technically whether this one is ready to go or not. Now, it's not for everyone. You can see how sharp it is, how volatile it's been. It's been like that mainly for the life of the stock. And we do have to say that these types of healthcare stocks rely on this, news, and also the word escapes me. But basically, when they're trying to put something to market, it needs approval. FDA approval. That's what I was looking for. So if news comes out from FDA, either positive or negative, this could move quite sharp.
I thought you were about to say because of the way that stocks moves with the volatility, even on the monthly chart, the best course of action would be to make sure you wear 2 pairs of jocks when you're trading these stocks.
What sort of show now? I don't know where this is going, but it's going in the right direction. I think I better bring everything back into line.
It's very, very volatile. It's a big point, and I think it's not for everyone, like you said.
It's not. It's quite volatile, but at the moment it's looking like it's setting up for a nice move. If we look at the weekly chart over here, let's keep our minds above ground. Now, it's a very different story to what it's been doing back in 2023, 2024. It's actually gone up in a nice trend at the moment. Now, with this news and this revenue increasing and that extra pickup in Bryansil, that's very positive, especially for a healthcare stock like this. If they can sell more of their product, obviously it's bullish. And I would say that possibly, if you wanted to be a little bit more conservative, and that would probably be the best place, wait for it to get above that $3 mark, and you'd want to see a bit of expanding volume, because you can see that the volume is clear on the way down and the volume is clear on the way up. And I've followed it back here, and that was a FDA approval story, why it gapped up and then eventually, started trading up. And even if there's a hint of FDA, something around not approving or approving, that's what will make this stock move.
Question, do you wait for that? Or do you trade what is now?
That is a good point. I would say yes and no, right? So if you wait for that, you may lose the opportunity. But if you know how to read the patterns, you may get a hint of that beforehand. So it really depends on what type of trader you are. If you want it to be more long-term, you might want to wait for the FDA approval because you know that it's been approved and it's going to be in a long-term trajectory. But if you're seeing some hint of it on the chart, something happening, and that's exactly what we're doing as technical analysts, we're reading the story on the chart. So right now, I'm not seeing that happening right now. I don't think that the stock has been picked up on that news yet. But if I do see a hint of that and possible, a continuation of the trend, then, I'd be quite excited about it.
All right, fantastic. Now, if you want more from us, check out our video, Do This to Profit from a 20% Market Crash. Buy now.